Welcome to the ARMR Report special alert. As promised on our 12 o'clock daily podcast / YouTube live stream, I am bringing to you a screenshot of our algorithm on the S&P 500. So let's not forget, this is the ARMR Report. It stands for Algorithmic Risk Management Research. This is all about using algorithms to help us manage risk while we invest in the equity markets. This screenshot, if you look at the top left-hand corner where my mouse is now, you'll see the S&P. So this is SPY, the ETF SPY. It's a 60-minute chart. Every bar is 60 minutes. What I've done is overlay a graphic representation of our algorithm so you could see when we put positions on and when we take them off. And so those of you who follow us on our website, rosenthalcapital.com, you know that we have a real-time risk on, risk off monitor. I talk about it all the time on our 12 o'clock live show. And so I update that monitor. And if you wondered where I got my information, it comes from this screen. This is just one example. At the bottom of the screen, you'll see we have algorithms, and I'm going to flip through them, that are designed for each of the major indexes that we follow. This is the momentum index that you're looking at, MTUM. This is the small cap index, IWM. This is the NASDAQ index, QQQ, triple Qs. This is the Dow. And we're looking at the S&P. And today's screen capture is an S&P screen capture. So without further ado, let me just walk you through why I'm willing to short the market at this point. I have not been willing to do that for a long time. Those of you listening to the podcast / live stream know that I want to get on the right side of probability and statistics every time I put money to work. And the simple fact is the market goes up 80% of the time. So trying to short, you're immediately behind the eight ball. I don't like it. But there will be times I do it. And I thought I'd share this screen capture with you to show you why I'm doing it. I will do it when the 50-day and 200-day moving averages are in downtrends. The asset is below those trends. That's where the bulk of the money is made short. And so what you're looking at here, my arrow on the screen shows you the downtrending black line is the 50-day moving average. This green line here, which is kind of flat but rolling over down, it's been down and up, but really flat, is the 200-day moving average. You could see the 50 crossing the 200-day today, which we all know is the death cross. You can't get worse than that. These red lines are simple downtrending channel lines that I've drawn in. You could see it starts back here in October. We challenged it once in November. We just challenged it now and we failed. Now we have a real downtrending channel. First time we've had that in a long time in this market. So take a look at these buy carrots. We call them carrots, these little arrows here. It tells you when the algorithm was telling us it's time to take some risk. So here we were out of the market. We started exiting up here. The market sold off. We entered here again. Now, the next down carrot, this white carrot right here, tells you raise, stop, sale. This green dashed line is our primary target on this entry. Notice how short that target is. Other targets, we look for much greater returns, but our algorithm is telling us don't look for huge returns on this entry. It's a dangerous entry. And it was precisely that. It hit exactly our target, rallied for a little extra, then rolled over, broke down. We had a raise stop. We exited at a profit. That was November. Now we just got involved again long last week, remember? Asset blew out to new highs, and I did a podcast and I labeled it test. This is the test. Either the 2-month sell-off is just a consolidation and the markets are going to trade higher, or this will fail and we will be in a downtrend that will last for a while. And that's why I'm willing to short. So we're going to get long here. This looks like a double bottom at the time. Remember, I put out on my Twitter feed, if you guys please follow me, because you'll be able to keep up with these a little bit better on hashtag ARMR report. I tweeted out a picture of this, right? There was the double bottom that we were looking at when we had our last buy signal, okay? So we're willing to get long there. It's worth the risk. We exit the position, and I'm going to blow this picture up for you so you can see the loss that we take, all right? It runs up here, book a small profit, raise your stop. The stop is raised to here, this red dashed line. But the market went down so quickly, and we only executed certain times of day, that we take a little bit of a loss on this asset. Not bad. If I could put capital to work every time and exit with a loss of 1% or less on my entire portfolio, it's a win. Because 80% of the time the market goes up. So eventually the statistics and probabilities work out in our favor, and we'll be able to catch the market for a nice ride. I'll take you for a little cruise back here. Let's take a look here at an entry point that worked. We got long right here on the 5th or 6th of July, ran up, had a couple targets, raised stops, booked a little bit of profit, and then depending on how aggressive you are, you book some or you book none. You just raise your stop. This pink dash line is our stop. The market followed it all the way up. Okay? When that stop eventually gets broken on this day, what I do is I update the risk on, risk off monitor, and I say it's time to start protecting capital. It was right near the top of the market. Then we update again when the algorithm has its final exit. And we say, hey, you've got to be protecting your assets. Something's wrong here with this market. All right? So why are we willing to short now? We had the test. The test was an epic failure. So on this exit point day, we're not only exiting a long position, but we're turning around and getting short the market. And I like to use equity index puts. So we're short the S&P, the NASDAQ 100, the small cap index, and the Dow using puts in our most aggressive accounts. All right, so I hope that helps you guys, give you a little clarity, the proverbial picture in 1,000 words. Please follow me on Twitter, hashtag ARMR report. I try to update that as often as I can if an algorithm is telling us something that I think will help you. Every day at 12 o'clock, you're going to find me on my Twitter, on my Twitter feed, on my Blog Talk Radio podcast, live, and you can also find us live on our YouTube video page at 12 o'clock every day for a half an hour to update you on the algorithms and try to give you some insights. Have a safe day trading out there, guys. Be careful. I look forward to talking to you on Monday. Have a good weekend.